Welcome to the chat. Welcome to the chat. So here we are going to be showing us how to backtest trading strategies, specifically candlestick trading strategies manually. One thing connects all professional traders, that is, they have 100% trust in their trading strategy. If we want to join this elite club of traders, we must know what to expect from our trading strategy. And this is not a complicated task. All we have to do is compile historical data which we can easily have a feel of how our strategy has performed in the past, and this would fortify our confidence. Backtesting is the process of evaluating a trading strategy using historical data to determine how it would have performed in the past. This allows you to assess the viability of your trading strategy before applying it to live trading. This can be done over the last few months, but we can also go back 5 years, 10 years, 20 years, as much as you can, so as to have a robust view of the data that whichever strategy has given. Nevertheless, here we are going to be focusing on manual backtesting, which is quite an exhaustive process because this consumes hours, this consumes time, and this is not done with algorithms or software. You need to do it by training your eyes, actively learning to spot visual cues, patterns, and their variations in the market. This hand-on approach deepens our understanding of market behavior, and it would help us gain confidence in our strategy. Over time, not only will this process reinforce us to stick by our trading rules, but it also owns our ability to recognize profitable opportunities in real-time trading. So, there are variables that we are going to keep in mind to backtest. Firstly, our risk to reward ratio, our win rate, confirmation method, frequency, and market timing. All these will determine our entries and exits, and we are going to be explaining all this in real time as our hands are going to be on real time data. So we are going to be backtesting four major pairs, which are Euro USD, USD CAD, USD CHF, and USD JPY. We are going to be backtesting only sell opportunities on these pairs. You are not paying me for this, and I'm just doing it for free, so you cannot expect me to do bulk loads of work for you. I'm doing this all for charity. So firstly, the rule we are going to be following, we are going to be trading two candlestick patterns, which is the engulfing pattern and the evening star. The engulfing pattern I have explained in previous videos, and if you have not watched those previous videos, do due diligence to watch them. The engulfing pattern, specifically the bearish engulfing pattern, comprises of two candlesticks, which is firstly, we are going to see a buy candle with buyers creating momentum, and the second one will be a bearish candle, a sell candle, with sellers shifting momentum and taking the pressure away from the buyers and shifting the pressure to the sellers. We have an example right here. This is a picture perfect engulfing candlestick pattern. So we are going to be backtesting this pattern. This is here in this red box. And secondly, we are going to be backtesting the evening star, which comprises of three candlesticks. The evening star comprises of three candlesticks, and let me show you a picture perfect example. Right here we have a picture perfect example of the evening star. The first candle, listen, the first candle has to be a buy candle. We can see buyers here, and the second candle has to be a sell candle. We can see sellers shifting the momentum from buyers, and the third candle is a sell candle that closes below the first buy candle. So this is the first candle, this is the second candle, this is the third candle. So this is the candlestick pattern we are going to be trading with a break of market structure, and we are only going to be trading the London session. So now let us begin with USD JPY. From January, we are going to be backtesting from January to December. From January, right here we can see an engulfing pattern that occurs at London session. Not just London session, keep in mind we are also going to be trading on the best days of the market, that is Tuesdays, Wednesdays and Thursdays. So our backtesting are only 3 days in a week. We are going to be ignoring Mondays and Fridays. So you can see on this particular midweek an engulfing pattern appeared, and when probably in the lower time frame there should be a break of structure here. So actually price spiked through, which failed. This is one failed setup on USD JPY. You should write it down. We are looking out for other engulfing candlestick pattern. We can see none. We need to keep going. Price does not give any opportunity. We need to keep going. We need to keep going. Price gives no opportunity. We need to keep going. No opportunity for sell. No opportunity for sell. And yesterday price gave an opportunity for sell. We can see an engulfing candlestick here, a break of structure in lower time frame. Price came to retest, and mind you, we are going to be using a 15 pip stop loss and a take profit of 90 pips, because our risk to reward will be 1 to 6. So price reached our 1 to 6. So now on USD JPY we have one failed setup and one winning setup. So now let us subtract 1 from 6. We have 5. Let us see, we are risking 3% per trade. So that is 15% on USD JPY. Actually this is a swing trade we are backtesting. You can backtest as a scalper, as a day trader, whichever type of trader you are and depending on your rules. But I am just constructing these rules to give us a concrete rules we are going to be following, because the same rules we are following on USD JPY are going to be the same rules we'll be following on USD CHF to backtest, on USD CAD to backtest, and on Euro USD to backtest. Now let's just go to USD CHF and see what the market has in stock for us. Let's just scroll back to January. As you know, we are backtesting based on only the engulfing pattern and the evening star. If you want to be a trader, you study, you need to do the hard work on the chart. Nothing comes on a platter of gold. Here we can see during the midweek, this is an evening star, and price broke the structure, price retested and hit our stop loss. That is one loss. You can see another opportunity, an engulfing pattern, price hit our stop loss. This is 2 losses. Another opportunity, an engulfing pattern, price broke, came through. We have 3 losses. And we have an opportunity here, an engulfing, a bearish engulfing, price retested and came to our TP. So now we have 3 losses, 1 to 6, 6 minus 3, we have 3 left. 3 times 3, that is 9% on USD CHF. So now USD CAD, let us go to January and backtest forward to see what the market has in stock for us. No opportunity yet, no opportunity yet. No opportunity yet. You can go check on your own. Carve your rules and backtest in accordance to your rules. On USD CAD, the market is not so friendly. Here we have a morning star, an evening star, you can see, and we are going to be trading only the London session. We are not trading late New York session. You can see when this pattern formed is London session. Here we have a 15 pip stop loss, price retested, came through and price dropped. We have a 1 to 6, on this particular pair. Other times it did not give much of opportunities. However, it seems you have 2 losses. So let's say 2 minus 6, that is 4 times 3%, that is 12% on USD card. Now let's just go to USD. Let's go to January and backtest forward. You can see our rules, our risk to reward 1 to 6, our stop loss not more than 15 pips. You can see right here on Euro USD we have an evening star. Price broke this structure, price came for a retest, price dropped 1 to 6. We have 1 win. You can write them down if the need be. No opportunity for sell, no opportunity for sell. Remember, we are only backtesting sell patterns. We have another bearish engulfing here, a retest. We have 2 wins. Here we have an engulfing pattern, price retested, broke stop loss. Here we have an engulfing pattern, hit stop loss. So we have 2 wins and 2 losses. 2 times 6, that is 12, minus 2, that is 10. 10 times 3, that is 30% on Euro USD. So a combination of this, you can see that your account would have been very poor with compounding, and there are many other patterns you can look through in the chart. So following from this, we can see that our confidence is backed on the morning star, on the evening star. The morning star is the buy pattern, on the evening star and the engulfing candlestick pattern, as well as our market timing and risk to reward, because the risk to reward will determine how much you make on a trade, and how much you make on a trade, that determines all. So firstly, market timing, the pattern, and risk to reward, as well as our entry. So the exit is as important as the entry. Our stop loss is 15 pips, our exit 1 to 6. So on 15 pips we'll be looking forward to 90 pips, and we have seen how everything played out on the chart, and even the one that played out yesterday on USD JPY, we can see it. So that is all about backtesting. You carve your rules, you look back through the historical data, you gain more confidence in your strategy, then you execute and trade without fear and emotions. I wish you all a peaceful week ahead.